Okay, I think we're live. I see people. Hello, everyone. Welcome on this session about the internal expansion. I will be the moderator today. I'm Baptiste from Lisan Finance. I live in New York and I work with French and US companies between these two countries, and also supervising many other ones in the world like Australia, Canada, and so on. I have been working internationally for the past 12 years. Today, we will discuss with Vincent Boujna, who is a partner at Finance Expansion and CFO and Strategic Advisor, and with Jimmy Vasilis, CFO at Zappi. Maybe you can say a few words about your experience and background, present you. So I don't know, Vincent, if you want to start.
Hey, I'm very happy to be around. I've been working for about 20 years now with startups or scale-ups. So I've done my first SaaS modeling back in 1999, so quite a while back. And I've been working with either US-based companies going international or UK or French-based companies expanding throughout Europe or the US. So I've seen the movie quite a few times.
Okay, thank you, Vincent. And Jimmy?
Hello, everyone. My name is Jimmy Vasilis. I'm the CFO of Zappi, and based in London, although, as you can tell, I'm not British. I'm actually Canadian, and I do speak French as well. So similar to Vincent, 20 years of partnering with leadership teams and C-staff to grow businesses, and I've seen and assisted in expansion in mainly US into Europe and UK, also UK into emerging countries and Australia and what they used to call the BRIC countries, Brazil, Russia, India, and China. So quite a bit of experience in terms of expanding in those countries, as well as monitoring, and then ultimately sometimes taking the decision to leave some of those countries. So really happy to join the session with Vincent and Baptiste.
Thank you, Jimmy. So just as a reminder, about the questions, if you have questions, feel free to ask them, of course, in the Q&A section on the right of the screen. We will monitor them during the discussions, and also we'll keep about 10-15 minutes at the end to answer all questions. So please do ask questions. So let's start with a question about the role of the CFO in the international expansion. As an introduction, I think we have some good advice and some experience in this process. So I would like to hear Jimmy let us know about how you see your role during the expansion and opening new countries for your company.
So from my perspective, the CFO or the FD, the finance director, the role is quite key from inception, the first idea all the way through to execution. The CFO has to be involved. You got to be engaged and really talking with your stakeholders to understand what the right level of investment is, what is the strategy, why you want to go into these countries, because then you're able to support and advise as to the best way to go into those countries, but equally more importantly, how to measure success, how to hold the company and those responsible accountable to say, okay, look, we said we're going to do X, we're actually doing Y, and really understanding what's needed to get it back to the goals, right? So it's very important to work with the C-staff right at the beginning in that decision-making process to lay the base and the foundations as to what the goal is, what you're going to measure, how you're going to measure it, and what decisions and actions are going to take place as you go through that learning curve. And of course, from a CFO perspective, we're going to be covering and supporting quite a bit of the back office stuff, data, risk, everything that you can imagine the back office support will be. So we got to make sure that we provide that support to enable that geographic expansion as smooth as possible. Vincent, any experience from your side?
Yeah, I totally agree with you from that the CFO has to be involved from the get-go. I think finance international expansion is a typical role or example of what the role of a CFO should be. You have to be a challenger for the C-suite, the C-level, and get them to explain what they want to do, why they want to do it, and measure, and so on. And on the top of that, another aspect is the CFO as a what I'm going to call a project leader. The CFO in the case of an international expansion is going to be the go-to person for everybody around the organization to coordinate the efforts, to make sure everybody is on the same timing, everybody is aware of the same kind of information. For again, for international expansion, as it is for lots of projects in a company that do cross, that are across various silos, the CFO is going to be acting as a project manager, I think.
Okay, and what do you think about the decision to go international? Is the CFO part of that process? Is it just supporting the decision of the company, or are you more proactive? Vincent, you think,
on my end, I think, again, for like everything else, the CFO, it's better if you are proactive, but commonly this is coming from the sales side of the organization, which is, hey, we have massive opportunity there. Let's see how we can best address. And that's crucial to have the conversation early on. I guess we're going to discuss that later on, but it's very crucial to have the conversation early on about what are the best ways to address international expansion. Again, for me, it starts with a business opportunity. You have a sales guy saying, I can generate lots of revenue there. How do we do it? That's the starting point. What do you think?
yes, and Jimmy, yeah.
I was going to add to what Vincent said. Absolutely, but equally, the finance, the CFO and the FD need to be involved, because sometimes, there isn't a limitless amount of cash, right? And you have to make some tough decisions. Let's say you're in the UK and you have Australia or Canada. Like, which one are you going to go to first, right? So you got to help them in that decision-making process. Is it quick revenue growth? Is there competition involved that you need to, go one place faster than in another? Do you have product market fit? Like, how quickly are you going to grow, and how quickly are you going to get that money back? So you're able to help in that decision-making process so that you can make the right decision in terms of where to place your bets in terms of that investment, because sometimes you just don't have all the money to go everywhere you want to go.
Yeah. And so we spoke about expanding intentionally for business purposes, like having new clients and growing the revenue. Have you seen other reasons? I don't know, legal, tax, or anything else, or finding new people, talents, whatever. What are the main reasons, Vincent?
Yeah, I think the key reason is revenue growth. That's what I've seen. I've seen occasions where we have created, I'm going to say, operational hubs in countries with lower cost of labor. So I've seen that. I've done that in Romania, for example, in one of my experiences. That's an option. But before you reach that stage, you need to have significant cost base and a significant size in your structure so that it's really worth it to have a separate team with all the hassles of, again, maybe things are easier today than they were 10 years ago, but with all the hassles of having people working remote. So you need that comes later for me. Something that I've seen as well is to do international expansion for tax reasons. So, for example, setting up an entity in Switzerland with picking the canton and create a whole shebang around that. I think that it's not, you may want to do that again in given circumstances, but that should be much lower on your priority than growing revenue and make sure that the operations work well in your company. Jimmy, what did you see that where you go to Switzerland for tax reasons, for example?
Yeah, I've seen situations where the tax was the reason, or some legal reason was the reason to expand, or I've seen, for example, especially now during the pandemic, employees who want to go back to their home countries, and then suddenly, the leadership team wants to keep them and make that employee happy. So, they go from the UK to France, or UK to other European countries, for example, or the US. And suddenly you have to figure out, okay, how do I set up, how do I remain compliant? How do I, pay the local taxes and the payroll taxes? And you're suddenly thinking, okay, do I now need to open up a branch here? And you're kind of expanding, but it's not really strategic, right? You're just trying to fulfill some compliance need based on a couple of unique situations. So those aren't ideal reasons to expand. So it's what I call the tail wagging the dog, right? It's the back office saying, okay, this is maybe why you should expand here or there. But Vincent was absolutely right. The main reasons are growth. The main reasons are maybe there's a competitor in another market that you need to get in before they get in, or if they're there, you need to equally compete. Or if you want to increase the value of your business, sometimes leadership is going to say, we need to be, for example, if you're in the EU or UK, we need to be in the US, right? So it's one of those strategic, this is going to help us increase the valuation. So those are all very valid reasons. But the back office reasons and tax reasons are always problematic.
Just if I may add on this one of the reasons for European-based companies to go to the US also is access to equity, is access to the capital market. That can also be a valid reason. You must have a product market fit and everything else. But on the top of it, it can be a nice benefit to start building your brand in the US if you want, as a step 2, to start talking to US investors who may not consider you as a French company or maybe UK-based company if you have not already grown your customer base in the US.
Yeah, and I also encountered companies like being acquired, and over the past 10 years, I think most of them had a subsidiary or some business in the US, and they were all acquired by US companies. So I think depending on where you go, you also create opportunities for investors or also exit. And about the way to go internationally, meaning do you need a subsidiary, or we see many new solutions to hire people remotely, like Deal, Remote, and so on, new companies like that. You can also have like independent contractors or people, and you pay them from your home country. I mean, do you have something to tell us about, if you go directly opening subsidiaries, or if you have like different steps in the process before creating a legal entity? What would be your advice, Jimmy?
So it depends, right? So I think what's really important is to create that playbook, so you know exactly what you're doing in each of the countries. So what we did in my previous company is we created a playbook based on going to the beach, right? So when you go to the beach and you test the water, you put your toe in first. And then once you're comfortable with the temperature, then you go waist deep. And once you're comfortable waist deep, then you dive in, right? So we use that to say, okay, what does toe in mean? Toe in means that, do we hire somebody or not? Do we just partner with somebody in country and then just have a rev share agreement? Or do we just hire 1 or 2 people? What's the marketing spend? What is the revenue that we expect if we're not going to be actually present in the company? And then once you see, okay, we can do it that way, and then eventually graduate to waist deep, which means, okay, we'll hire 5 people, we'll hire salespeople, we'll hire marketing. And then you kind of figure out, okay, then what does it look like? What does the revenue look like for that stage of growth? And then all in, what does that mean in terms of, is it 10 people, 20 people? Do they have like an on-site finance person, HR person, or is it still managed from the HQ? So building that playbook or that framework really helps guide to say, these are the stages, and if it's this stage, for example, toe in, like really we're not going to have a huge presence, then maybe a branch is more appropriate. If it's waist deep or all in, then you need to say, okay, I'm going to trigger some tax risk, I'm going to have a permanent establishment in there. I need to figure out, is subsidiary the best? and how to kind of support that from a strategic position. So I think it depends on how that go-to-market in that country is going to develop, and having those stage gates and having those different, types of entry points and levels is really key, because then as a finance person, you're able to support and advise appropriately as to how you're going to do it. Hiring 1 or 2 people is very different from hiring 20 people in the country. Vincent, any thoughts from you?
Yeah, I'm maybe a little bit less structured than you are, because I think it's going to depend a lot on the context and the opportunities that you might have, and also the long-term goals. Um, but what's crucial clearly is that the CFO is involved early on, again, as we said, so that the means that are put in place are really aligned with the opportunity and the goals. And so clearly, if it's purely business development, clearly a first step of making sure that you start building the brand from your home country. That's clearly a cheap, easy, low-hanging fruit way that you can approach that. But if you are serious about a country, I'm kind of low risk hanging fruit, or either that or all in kind of strategy. And all in means, okay, you've tested the water, as you said, but then if you think the water is fine and you can go, then you dive, you create a sub, you decide right away that within 12 months you're going to have a team of 5-10 people, because below that you're not going to have all the resources adequate for the country, and so on. So I'm either kind of a test the water and then dive all in.
Okay, thank you. We have a question from Sabrina about PEO services, also professional employer organization. Yes, here is a question. Do you have some experience with this kind of organization for an international expansion? Vincent?
I've never used these before. What I've done is create branches of an existing subsidiary in another country. So in that case, that was for employee based in the UK who was relocating to Denmark to address the Danish market, and that's how we handled that. I'm very reluctant personally. Again, I'm kind of a test the water and then dive all in, or you stay with kind of on the side of the water. That's my recommendation. So what I've done in most cases is just either work, say, UK based and address another country, or open a fully blown branch and create the full infrastructure. The reason for that is that at the end of the day, it doesn't save you a lot of hassle, and the fact that you create a fully blown subsidiary, that kind of making it difficult. And it's not that I want to be a difficult CFO to work with, but that allows to ask the right questions and to say, is it really worth it? Are we going to really make something out of this investment? And then if you have a business case, then that's what I recommend. But Jimmy, you may have a different view.
No, I think you're right. I think we've got to continually challenge to see if we're going to make money and how quickly we're going to get that return. Specifically on PEOs, yes, I've worked with PEOs. I think there are pros and cons. I think one of the pros is that you don't get involved in the local compliance, and you don't have to scramble to figure out how to pay people and how to give the benefits that are required locally. But it is a bit more expensive for the PEO organizations to provide that service, but you're saving a bit of cost because you're not doing that work. I think the hazards with PEO is that you gotta be sure that you don't trip over that, or who's the real employee of substance, right? Because, for example, if you give stock options normally to your employees, it's almost impossible to give stock options to an employee that is hired by a PEO in another country. So you got to think, okay, how do we keep that equity with that person if it's a key member of staff, so that they don't feel that them going to, like Vincent's example, going to Denmark, they're losing out on stock options. So those are the pros and cons. You got to think about, the ease and the cost of working with a PEO, but also some of the equity stuff, where you may not be able to issue them just because you're going to trip over the rules, and you may be subject to tax as a result. So that's my experience with PEO.
Okay, thank you. And as we are talking about compliance, we have another question from David about transfer pricing. So yeah, you can see this question about when it's the right time and how much it costs. So what do you think? I know the situation between France and US, but did you also to deal with transfer pricing among many entities, and when do you start considering setting up a proper policy? Jimmy?
I think from my perspective is depending on the revenue expectations and the cost base in the countries, right? And where those decisions are still being made, essentially. So, I mean, my recommendation is to use your tax provider to help you assess when you need a transfer pricing policy, and what you have currently, and the documentation you have currently, whether it's sufficient based on the level of revenue and the cost base that you have in the particular jurisdictions. Personally, I think it's always good to have a transfer policy documented, so that in case a tax question comes up, you're able to justify the reason why you have X amount of revenue and tax in one country versus another. So I think the earlier you start understanding what is needed and start looking at the business and saying, okay, where are decisions being made? Where's the management team based, et cetera, which is really going to drive that transfer pricing policy. The earlier you get it, the more comfort you have that you're compliant, is my advice.
Okay, thank you. And another question from Chloe about the consolidation. About maybe you can also speak about the tools you use for consolidating different entities, and how you manage that. We had also questions about if you need like a local accountant, or if you manage everything from your headquarters. So I don't know, Vincent.
So
explain.
yeah, first on the consolidation, the very first thing that you can do is do your consolidation in Excel, but it's not very scalable. And I would recommend to very quickly get equipped. I'm not going to advertise on any tool, but I would just generally take an ad hoc proper consolidation solution that you can integrate with your accounting system, so that it's easier to manage, especially if it's just international expansion. Consolidation is not very tricky, but when you start doing acquisitions and you start having minority shares and so on, I don't want to do a webinar about consolidation because that can be 2 hours on its own. But my recommendation is to start with Excel. If you have like 3 fully owned subs, that's not very complex. Make sure you document everything. And then if you start growing and are serious, clearly move to a proper best of the class consolidation solution. Regarding accounting teams and so on, I've used various models. Again, depends on the size of the operations that you have locally. One of the models that I've had was to have a local accountant. When you have a subsidiary that is large enough, it's very good to have somebody local in your team as an employee who can have also functions as HR, office support, this kind of general admin role. And it's very good to ease the flow of communication and better understand the issues. Something else that I've done, and I worked with BDO as a partner for that, and I really enjoy that, is have one single network of accountants to handle all the payroll and accounting and statutory topics and so on in all the countries. We had about a dozen subsidiaries outside of the US, and it was very good for us to have one single point of entry. About that, it's again, if you have 1 or 2 subs, that's okay, but very quickly it's crucial to industrialize your processes and go away from, oh, the sales guy there knows an accountant who is his brother-in-law that I'm going to use to do the bookkeeping of the subsidiary, and he's banking with that bank, so I'm going to go to that bank, and so on. You can do that with 2 or 3 subsidiaries, but very, very, very quickly, this is not scalable. And I really recommend that you step away from that and you go to, again, I dropped the name of BDO, but you go to whoever you wish. And if you want to do that internally, that's okay, but that you have an industrialized vision of, okay, this is how we're going to handle accounts receivable, accounts payable, payroll, tax, statutory audit, statutory tax filing, VAT, and so on. And a good way to do that, again, is with experts.
Jimmy, do you share this opinion?
I agree with Vincent. I think in my experience, I've done exactly that. Just use, coincidentally, it is BDO as well, but you can use anyone. And for example, we outsourced all the payroll to a provider, and we got reports that were in the same format, in the same portal, and we can query and look at everything holistically. And you have one partner, maybe one account manager that you go to for all issues, and then they liaise with the different in-country accountant. So I think there's a lot of benefit from streamlining by using single providers globally. And again, similar to what Vincent said, the most important thing as a CFO and a finance director is there's going to be that person in country, the general manager or the head of sales, or whoever's in there, who's going to get pulled into these administrative tasks. And what you need to do is make sure that you take that off their hands, because there's going to be a lot of noise that's going to be created saying, oh, instead of selling, I'm actually doing reviewing payroll, or going and queuing up so that I can submit my VAT to the bank. And what you don't want is your sales team or your marketing team or anyone on that commercial side to get involved in the back office. So where you can, take that all on finance, which includes HR, facilities, insurance, all that stuff. You should take it because it's very distracting and it becomes quite a lot of noise for the commercial team, and quite frankly, an excuse when they miss numbers, right? So you don't want to give them any excuses. So when you think about the process, and as Vincent says, industrializing those processes and really streamlining them, think about how I make sure that commercial team is not really involved and not saying, my brother works at this bank, so let's use this bank. This is, a central decision, and it's not really kind of a consultative decision between the local commercial team.
Okay, thank you. And I think it also answered the question we had about the role of the CFO versus a COO. Maybe you can explain a little more, Vincent, if you share the responsibility of international expansion with someone else, or
no. Usually, I've taken care of these topics again as a project manager and taking into account the inputs from all the various parties. Again, it depends on all the structure. The role of CEO can vary, within a very wide range depending on the company history and culture. But the CFO for me in a company is one of the guys who has the best knowledge of the short-term and long-term issues of every individual in the C-level, within the C-level people. So again, this is why I think this can be the CFO can be a good project manager. That being said, depend on your size. If you are a 2,000 people company, clearly you can have, like I was for Bazarva as a head of international finance, and I was doing kind of as a CFO that role of project manager. So it varies on the structure.
Okay.
If I could just add one thing, that is for that question, I think it's interesting because when we talk about project manager, I think we need to be specific in that we're talking about, of course, finance, we're talking about tax, and then all the back office structures like HR or the people team, facilities, insurance. And as a CFO, I think we kind of need to step in and own that, because ultimately risk is under our umbrella, and make sure that we identify it and mitigate it, and we have a plan. So I think, when you think about project manager, I think we need to make sure that all of that is functioning quite smoothly, because an HR issue is going to bubble up into a legal issue and can bubble up into a finance issue if you need to pay out people. So all of that needs to be contained and managed, and that's why I think Vincent's comment around CFO being a project manager is important, because we got to keep our eye on all of that to make sure that it's running quite smoothly.
And Jimmy, just if I may add, I think the responsibility of the CFO goes beyond the admin aspects. I've seen myself talking with the product team, making sure that the product is indeed localized, that we can indeed handle Japanese customer, because I realized that the salespeople wanted to go to Japan before the product was ready. So, and kind of only the CFO or a COO, again, maybe in a company, can step above kind of every silo and make sure that everybody is coordinated.
Yeah, I think that's a good point. And as there is an important part of the CFO role, which is managing the budget and making sure the costs are under control. You have some kind of numbers you can give us on how much money you need to go into new countries, how you deal with that, if you made some fundraising before going internationally, or I know in the US we say that sometimes we need at least $1 million for the first 12 months. So yeah, can you give us some insights? Maybe Vincent, I know you know the US pretty well.
So there are various types of costs. There is the tip of the iceberg, which is just the cost of creating a new subsidiary, new structure, having new accountants, new whatever, tax advisor, and so on. This is relatively cheap. If you don't go to a country because of that, then you should not even consider going into that country, because that's the ballpark number to set up is, I don't know, say around 25,000 euro, including your creating of the transfer pricing. I mean, all of that's kind of a 25K envelope. But that's just the tip of the iceberg. Then you have the real cost, which is just entering the market, making business there, growing your revenue, having marketing. And that's just like, depending on the size of the market and how you can replicate and leverage what you've done before in other countries. But it's almost like doing a business case for creating a new company, at least from the sales perspective.
Thank you,
I
Jimmy.
think that's right.
Yeah.
If I can add to that, so I think that's where a playbook is really important, because if you're going, just one or two people versus 20 people, then you know that the biggest cost you're going to have is actually salaries and staff and commissions and sales, the marketing program spend, depending on if you're brand new in that country, if you have competitors, if you need to kind of educate the market on the whole product and the offering. So those are the big components, the people costs, the marketing program costs, and then from the finance and the other costs. Vincent is correct. It's about 25 to 30,000 euros, where you think about filing fees, audit, returns, various other admin type costs. And then you got to think about facilities. Do you want like a permanent, office there or not? And those are other considerations that you need to think about. But those are the main, I think, things that you should consider.
Okay, and how do you keep track of the success in a new country? I mean, I guess it takes some time. So we have seen stories that takes years before a company is successful in a new market. So during that time, do you have some metrics or a way of judging if it's time to stop or to accelerate? Vincent?
I don't see international expansion as a specific topic in terms of KPIs or measurement or whatever. For me, it's more like it's just another sales team. It's another territory. That should clearly, whatever you do internationally, that should completely fit in everything your standard reporting does, or you should adapt. But you clearly don't want to create ad hoc stuff to understand. That's my view on it. But to measure on a specific project. So if clearly you want to have, depends on, again, on the stage of the company. If you need to have a focus on your bottom line or your cash burn for a given project, clearly that's what you should measure. But I believe that for most of scale-ups, the main topic is the top line, and you want to measure the exact same thing as what you've been measuring before, which is number of leads, number of revenue, number of new customers, revenue retention if you do SaaS, whatever, the exact same things. But I would advise to keep it simple.
Okay, good. We have a question about pricing in B2B SaaS, so quite specific. But so generally speaking, do you adapt your pricing internationally? And as we are speaking about the top line, does it have some impact on that? And Jimmy, if you want to comment.
Yeah, I think this is an interesting topic because, for example, selling in euros or pounds in South Africa is very expensive, and you can be, pricing yourself right out of the market. So I think what you need to do is look at your pricing and your cost base in general, and then when you go to markets where there's either competition or specific market issues around affordability, you need to adjust your pricing as a result. So I think you do need to review quite closely what that pricing is in particular countries. If you go, for example, to Russia or Turkey or China, these are countries where you have to look at that pricing more specifically. Equally, if you go to like Brazil, and I'm picking on Brazil or India, where there's withholding tax, right? Those are real tax issues that can impact your profitability. So you need to assess and say, okay, do I factor in that withholding tax into the price to the customer, or do I just kind of bake it into my costs? So I think as you expand, you need to definitely look at your pricing, the affordability, and the competition pricing in country as well.
Yes, that's for sure. And you gave a list of countries. I had one question about which countries do you prefer, do you recommend versus the ones you should avoid? I think you had bad experience with Russia, or can you tell us a little more about like the best or worst country to go in, Vincent?
So that's one of the reasons why you want the CFO to be involved very early on in these projects, is because you can get trapped into let's create a subsidiary in Brazil, for example, just as for the sake of example, and that becomes an endless. Don't want to use the word nightmare, but I don't have a better word in English. An endless project and complications. As my philosophy is kind of, either we sell from where we are already located in these countries, or we go later on with a fully blown subsidiary. I have kind of a list of a blacklist of countries where I say I'm not going to hire people there, and that's out of question unless you tell me we can have a team of 50 people in 2 years there. So clearly doing business in Europe is easy. Doing business in USA, Canada, Australia, Hong Kong used to be easy. Now I'm not sure anymore. Singapore, New Zealand, all of these are very easy and clearly on the green list. On the kind of orange lists, I've got countries where it's more also of a cultural difference issues, where I found it difficult to work with accountants, even though it was BDO people, accountants in Japan, for example, where they are kind of in the range where it's not going to be impossible to work with, but it's going to be more difficult. You're going to have to adapt a lot, and it's going to be harder you need to justify harder beforehand that you want to invest there. And then there is a list of countries such as Brazil, where the complexity and the withholding tax, and Russia with the GDPR risks and all these kind of things, where it outweighs to me completely the benefit that you have. Again, that's very general statements. Every company is different, so you decide.
From, if I can add to that, from my perspective, Vincent's absolutely right. I think there's no good or bad countries. It's just level of challenges that you're going to face, right? And the more challenges, the more costly it is to solve those challenges. And I think what you need to consider is the language, the culture. How are you going to manage the process, the people? You know, whether if you're in the UK, how are you going to manage a team in India? And some of the cultural differences and expectations that may arise, right? So I think there's a lot of HR issues, legal issues, compliance issues. For example, if you're in the US and you do business in Saudi, or if you do business in India, or if you do business in China, you got to really think about, okay, how do I train my team around Foreign Corrupt Practices Act or anti-bribery? How do I train my team around, anti-boycotting? Some of the very specific legislation that can get you into trouble in some of these countries. So you got to look at the compliance and the governance around how you execute in those countries. So I think, culturally, language, compliance, all these things add to, the challenges that you're going to face. And they may or may not influence whether you go into a country or not, but they're certainly going to influence the cost and the time and effort needed to go into those countries.
And just one last point, if I may, is never forget the end goal of a company is pretty often to generate dividends for the shareholders. And you can create, if you create a business that is massive in a country where it's pretty much impossible to withdraw the cash, and the only thing you can do is distribute it to your local employees and grow the business further, you may not see the actual benefit of being in that country.
Yeah, that's a good point. And so if you make bad decisions, or if the business is not working well in a country, have you had experience in like closing it? Because we are talking about the expansion, but sometimes it's not very a smooth one, and you have to revise your strategy. Have you had this kind of difficult decision to make, and also how did you handle this the process? Was it hard to kind of redo everything from a country? Jimmy?
Yeah, I faced that before, and I think the key is just agreeing up front what the criteria are for success and whether you're there or not. And I think, when you go into a country and you create a playbook and you say, oh, we're going to hit X amount of revenue by this time or this cost. If you don't hit it, then you got to assess, okay, is it product market fit? Are there other reasons? Or is it just not working? And sometimes you come to the conclusion that the costs are too high, the unit economics are just not working, and so you have to scale back. And so you constantly have to ask yourself, do I, we use the term here at Zappy, kill, scale, or amend? Do I amend the investment? Do I scale it and pour more money in it because we see the returns, or do we just kill it? And I think those are very difficult decisions. But I think if you put it in the context of data-driven, agreed, these are the KPIs, and this is what success looks like, and we're not going to get there or we're surpassing it, then that discussion becomes easier in terms of making that decision. And then you just got to work with your leadership team to say, okay, what is that that divestment look like? Is it full withdrawal? Is it just bringing the cost base down to match the revenue and getting a bit more profitability out of that country? So I think those are the decisions you need to make, but it's all based in the metrics and the data and the success, and giving yourself time as well. You can't just say, well, we're there 12 months, it's not working. But maybe you need a little bit more time and just being a bit more agile. But at one point, you need to realize that if it's not working, it's not working. And you're gonna, as a CFO, you're gonna be facing people who are really attached to the idea. I always wanted to go there, and therefore there's a bit of ego involved. So make sure that from an objective perspective, you have the data, you're only talking, factual outcomes and insights, and then really guide that decision in terms of, I think our money can be better used and we can grow faster elsewhere.
Yeah. Vincent, did you want to add anything?
Yeah, clearly, sometimes you need to withdraw, and I've seen that when the initial decision was not made based on data, but was made on people, and I've got this gut feeling or whatever, or that country is going to be a big market, or when you want to attempt to do tax optimization or these kind of things, and if you decided to go in a country for the wrong decisions to start with, it's not a surprise that it doesn't work out well, whatever the execution is. And so I've done that, and be aware, everyone on the call, that closing a legal entity is as expensive and more painful than opening a legal entity. Just be aware of that. It's not in, it was not, I did not anticipate that for the first time I did it, but anticipate the fact, be aware that it's more difficult and it's more expensive than creating.
So thank you, Vincent. We have a few minutes left. So maybe quickly to wrap up this session, do you have like 3 advice or 3 mistakes to avoid, like a quick list of things to do internationally? Vincent?
I was hoping Jimmy would go first.
Oh, Jimmy.
No, that's okay. The first advice is, as a CFO for international expansion, like everything else, be proactive. Go to the face of the people and talk to them and ask them what do they have in their mind, and help them to execute, and just to make sure everybody is aligned. That's the first advice I would give. The second one is kind of Jimmy's beach playbook, is be aware of, this is the first step, this is the next step, see the future, see where you are going to long term. Do not focus just on today's execution. I need to open a subsidiary, therefore I need to create bylaws. Go further and see all the various steps that you have in the playbook. And the third one is that I would give is, if you are in a scale up, be focused on obviously scalability, which is make sure that everything you do is standardized, that you can industrialize your processes, and that kind of, it seems what Jimmy and I have done with BDO is have really an industrialized process for the opening, the life of a subsidiary, and make sure that it's just the machine is gonna keep rolling and path to growth is there.
Okay, great. And Jimmy, in 1 minute.
From my perspective, exactly the same thing. Get a playbook in agreed, and really get those success criteria agreed in advance. All decision making needs to be based on those KPIs, those criterias, and against the assumptions and the goals that you've set out. That's the second thing. And the third thing is really agree up front what data you're going to look at, when you're going to look at it, and then that the decisions are always kill, scale, or amend, so that no one is surprised that you're bringing up, should we divest, right? So playbook, look at the data and make sure that the data is there, and then review and establish that cadence of review and dialogue, and just really digging into the numbers.
Okay, thank you. So I think we answered most questions, and we had a nice discussion. I would be interested in knowing, like, what are your next projects for this year or in the future? For example, Vincent, you want to share what you're going to do next? New countries, maybe?
I'm a little bit stepping away from operational finance and having more of a sparring partner role or coaching role with founders who've not seen the movie as many times as I've seen it, or with CFOs that I support, because being a CFO sometimes is a little bit of a lonely role. So I'm doing this, for example, with a company called Cresus that helps CFOs with getting a higher return on cash just with managing payments with suppliers. and I help them just to, as they say in the U.S. Marines Corps, to sweat more in training and bleed less in battle.
Nice. Jimmy, if you have anything to say to close the session.
No. From my perspective, our information is there. Vincent, Baptiste, and myself. Please reach out to us if you need any further clarifications or questions. Happy to help. And it's been a real pleasure to partner with Baptiste and Vincent on this. And hopefully, it was useful to everyone attending.
Yes, thank you both of you. I will also, of course, be happy to talk further about these topics, and especially between Europe and America. So feel free to contact me, and I will be also in the Lead and Finance booth during the event. So I hope we can have this discussion with everyone. Thank you, and I think it's time for the next topic. So we'll say goodbye and have a nice day.